Hey there, it's Sean Humphreys, Dominion Lending Center's Edge Financials, here to give you a market update. Today is October 6th, 2017. So I'm going to be covering the latest Toronto real estate numbers that came out this week, as well as some updates from the Bank of Canada, as well as some strategy that we'll get into. So hopefully this video is not too long. We'll try to move through these items pretty quickly, and let's get into it. So the Toronto Real Estate Board announced their numbers. The average house on the market right now is a healthy $839,000. So to put that in perspective, the year's high was actually $888,000 back in April 2017. Now you might be thinking, wow, that's a huge drop. I mean, almost $50,000 in terms of difference in the average price. But if you look back to January 2017 or December 2016, the average price was $729,000. So we're still up $110,000 over the course of the year, which I think is pretty significant numbers. Now you're seeing a slowdown in the buying pace, so there's more houses on the market. People aren't buying quite as quickly, which is probably the reason why the prices are coming down as they are. Now, we were at a record pace before, prices up 30% year over year earlier in the year, and that definitely wasn't sustainable. So we're really returning to somewhat of a market normal right now. There's going to be some changes, or there's going to be some bumps along the road, but we're really returning to an equal market between buyers and sellers. Now, there's about 3 months of inventory on the market right now, and when I say that, I mean that if no houses or units were added to the market, it would take about 3 months at the current pace of buying and selling for all the units to be sold off. So at about 4 or 5 months, that's where it's considered about an equilibrium, a balance between the buyers and sellers. So right now we're still in a seller's market, if you can believe it. And putting that in perspective, at 3 months of inventory, Toronto is still at the fastest pace of any of the markets across Canada right now. So some markets are 5-6 months, as if you want to use different cities as a comparison. So in terms of condos, they're still blistering hot. Condos have not seen the same decrease in prices as maybe the outer skirts of the GTA have. So if you look at September 2015 prices, the average condo price was $285,000. Now, there's not a single unit on the market right now at $285,000, or at least I'm not aware of it. But the average the average condo in the GTA right now is $520,000. So over a 2-year period, that's a significant increase in prices. What is that? $235,000 over 2 years. So it's a really good time in terms of to sell a condo, and it's actually a great time to buy a house. So if you're looking to make a move from maybe a condo and move up to a house, whether it's in the outskirts of the GTA or moving up into the suburbs, now would be a great time to sell that condo and move up to a house. Not as many people are interested in houses, and a lot of people are interested in condos. The other thing I want to talk about is mortgage rates. So in terms of mortgage rates have been in the news a lot lately. Mortgage rates have been going up pretty significantly. We've seen 2 rate increases for the Bank of Canada's overnight lending rate, which directly affects the prime rate, which the variable rates are based on. So we've seen those fixed rates come along up as well with the variable rates. A lot of people have been asking me, is this the time to lock in? Is this the time to do it? That is completely up to you, and particularly something that you should discuss with your mortgage broker if this is a good time to lock in. But what I can tell you is that if you are locking into a fixed mortgage with one of the big banks, the penalties to break out of that mortgage are typically much higher than they would be the variable mortgage. So you're trading maybe some of that cost certainty of the payment that you'd be making over the next few years for a more restrictive mortgage, or something that could cost you into the future if you decided to break that mortgage. Now, everybody says, no, I'm never going to break my mortgage. It makes sense to go fixed. But the reality is that most mortgages only last about 3.5 years. Most people do end up breaking that mortgage for one reason or another, whether it's to refinance debt or to move somewhere else or their life changes. A lot of people end up breaking that mortgage. So it's something to keep in mind. And as well, switching from the variable to the fixed, your fixed mortgage rate is going to be, your fixed mortgage rate and payment is going to be higher than what you're currently paying on your variable. So just some different food for thought. So where are rates going from here? So Stephen Poloz, who's with the Bank of Canada, he talked about this week of kind of shifting the economy into neutral is one of the headlines that I saw. So what does that mean? Well, so we've had these 2 rate increases over the last couple of months, and what that's really done is shaken up the industry a little bit, shaken up the markets. What is going to happen next? Are we marching up to 5%? Are we staying here for a while? And it certainly sounds like over the next couple of months that the Bank of Canada wants to kind of see what's happening. Let's read some of the industry reports. Let's read some of the market numbers. Just today I saw that employment in Canada is up again for the 10th straight month. We've seen 100,000 or so full-time jobs being added to the Canadian economy, which is great news. So any of these great news stories are probably going to push the Bank of Canada to do something further. But some of the other things that are pulling that down would be the NAFTA talks. That's really putting a lot of question marks out there on how aggressive the Bank of Canada wants to be if the US is going to be aggressive on renegotiating NAFTA. So it's a lot of question marks in the economy right now. It doesn't feel like to me like it's the time to be raising rates. And I think that Stephen Poloz is in that market mindset of let's hold the market right now, let's hold the rates, and let's see where the economy goes. So it's he's basing it on some of those market numbers, but also conversations that he's having with different industry leaders. So the 2 interest rate hikes that were made over the last couple of months, that was due to taking away some of the stimulus that was put into place when they made 2 consecutive rate deductions back in 2015 when we were having a bit of an oil price crisis where the oil market dropped significantly, and it was said that they estimated that it put $60 billion back into the market over the last couple of years by making those rate decreases. Really feel like those rate decreases have done their job, and that's why they added those increases, the overnight lending rate back up to 1% from 0.5%. So it seems like they've gotten back to where they feel normal is right now, at least for the near term, and then they will continue to make some decisions based on that. And now we can also expect this month, October 2017, that there's going to be some further tightening, if you can believe it, in the mortgage industry. They're going to make it harder for people to borrow more money, even if you've got 20% down. So regardless on the purchase price, you're going to have to qualify at a higher rate. They're talking about qualifying at the benchmark rate, which is 4.89%, or even qualifying at your contract rate plus 2%. So if you're borrowing money at 3.5%, you're going to have to qualify at 5.5%, which is going to take a lot of purchasing power out of people's hands, and it could really make a difference on the market and some of these areas where people are just saving up just enough to maybe avoid the insurance, but are actually not going to be able to qualify for quite as much money. So that's all. Over the next couple of weeks, we expect those changes to be announced. There's lots that could happen over the next couple of weeks. I don't expect that it's something that is going to change. I do see those mortgage rules tightening over probably around October 25th, just in time for Halloween. And we'll certainly see what happens. Anyway, thank you so much. I want to thank Bart for the idea to make this video. If you would like me to create a video, or you have any questions for me, leave a comment in the comment section below. And don't forget to either subscribe to my channel or as well like my page. And thanks so much, and I'll see you next time.